a burn rate is not bad by itself. Companies losing tons of money before they make tons of money. This happened at Facebook. This happened at Google. They never lost tons. That's okay. What I worry about is companies that are losing tons of money and have no plan to ever make lots of money. That's the problem. And so these super low margin businesses that operate as if they were a high margin business, that I think is a real problem. And many people aren't thinking about how these businesses will eventually make money. So if you have the operating culture of a Facebook, but you have the margins of an Amazon, that's a problem.
So what are you telling your startups?
Have a plan to eventually make lots of money. Like, this one thing alone is like a light bulb for some people. They're like, oh yeah, I actually do need to generate, someday all businesses are valued as a multiple of earnings. Sometimes that takes 20 years, eventually it happens. And so just talking to our founders about, it's okay to lose a lot of money up front. You can invest in growth as long as the fundamentals of the business support it. But you do have to have a plan someday to make lots and lots of cash flow.
Now, it's interesting. I recently had a conversation with Bill Gurley, who expressed a lot of concern about the unit economics of on-demand companies like Postmates, Instacart, Ship. Do you share those concerns about those kinds of companies? Why are so many investors getting into on-demand startups?
Well, yes, I do. Bill is on the board of Uber. I think he's a wonderful guy. Uber has probably burned more capital in the last 5 years than any other startup ever. So I don't think even Uber is immune to this. I think Uber is going to be a giant $100 billion+ company, but I think Uber also will have to sort out the unit economics in each ride.
I want to ask you about Reddit.
Yeah.
You came in, you made a lot of changes at Reddit. How do you feel about the changes you made, and what do you think it's going to take for Reddit to make a comeback?
I think it's I'll disagree with the premise that Reddit needs to make a comeback. The company has more than 200 million unique users. It's growing really fast, and it hasn't even done the easy wins. One of the counterintuitive things I learned about investing is that you should prefer an unoptimized startup to a really optimized one. If a startup is growing incredibly well like Reddit is and has lots of broken things, like no great mobile strategy, you can fix those easily, guaranteed, and then it will be even better. If it's already fully optimized, there aren't the same number of easy wins.
Ellen Powell came in as interim CEO of Reddit. She spent a few months there, and then she moved on. She's decided now to not appeal the Kleiner-Perkins situation. What's your reaction to that? As you've been watching from afar.
I don't want to comment on her sort of specific decision to appeal or not. I will say that I really enjoyed working with her, and I think that she really brought the issue of women in tech to the forefront of public interest in a way that was really important. And I'm very thankful for what she did at Reddit. Did
you guys learn anything from that, or are you doing anything differently at YC because of these issues that have been raised about diversity in the industry?
Well, everyone talks about diversity in tech. I think the best thing you can do is not talk about it, but just act on it. 1/4 of the women of the partners at our firm, we have a flat equal partnership, are women, and we're funding. We fund women that apply at exactly plus minus a rounding error. We fund them at the rate they apply. So I think those are the things that we can do that really help. But I also don't think diversity in tech is just about men and women. It goes in a lot of different directions, and we try to be thoughtful about that. It's the right thing to do. I also think it'll be the best thing for our returns.
Do you think funding at the rate they apply is enough?
Well, it's very hard to do more than that. I think what we can do is continue to encourage more women to apply. We hold the Female Founders Conference every year. The women in our partnership go off and meet with women and talk to them about startups. So I think we can increase that number, but it would be very hard for us to fund at a higher rate than they apply.
So, we were talking about the environment earlier. How do you see this playing out? The environment that we're in,
stuff feels expensive to me. It has felt expensive to me for a long time. Maybe it gets more expensive. Maybe it crashes. I don't know. But I believe that, the great companies, the companies that really matter to our returns and to sort of quality of life for people, those will define in any environment. So I try to leave pontificating on the environment to people that come on the show, and I try to just sort of focus on getting the particular companies right.
Is this unicorn theme, is it dangerous?
What do you mean by that?
So I was talking to Mark Benioff about this, and he said, I think people are just more obsessed with being unicorns and having a billion-dollar valuation than they are about focusing on their customers.
Absolutely. I think, I looked through the list of companies that have over $1 billion valuation recently, and more than half, I think, were valued between like $1 billion and $1.5 billion, and something like a quarter were valued exactly at $1 billion. So people are clearly obsessed with getting to this like mark, and they're willing to like put all sorts of weird structure on their terms to get there. And yeah, I think like if you were looking at the financial data, like you would say something is amiss. You'd say there's some fraud going on or something. If you were just looking at the numbers, because they don't fit the distribution you'd expect. There's this huge desire to get right to $1 billion or just over. I don't care about it. Like that's not. I think it's dumb, but it's like that's not going to make a company great or not.
Is it going to come back to bite them?
I do think, if you should have been worth $800 million and you raised it $1 billion, that's not going to matter. If you should have been worth $200 million and raised it $1 billion and don't execute perfectly, yes, that will come back to bite you.
So what's your advice for these guys raising?
Well, we always tell people don't over-optimize on valuation and don't accept messy terms. You can get any valuation you want with sufficiently crazy terms, but that will come back to bite you, like 95% of the time.